Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Amias Gerety, partner at QED Investors, to discuss investing in climate-related technology as well as what's happening in the crypto space. Amias, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me. Glad to be here.
You got it. And many of the discussions around ESG and climate seem to be mostly branding on top of commoditized offerings. What are some of the trends that you're seeing there?
Yeah, I think this is exactly the right point, Jill, that there's a lot of consumer power behind labeling something ESG. But when we look out at the landscape, what gets us excited is where there's a real difference in the financial tools necessary to finance a climate project, and not just we're going to take regular old project financing and we're going to slap a green label on it. And I think this is a big challenge for the industry right now. You can see all over the place that people are struggling to really identify the difference between true climate finance and just a green label.
So what's the difference with traditional finance versus green financing?
Yeah, so let's take a classic example here from our portfolio at QED. We're an investor in a company called Solfácil in Brazil. And Solfácil does something very straightforward, which is it finances residential solar. Now in Brazil, because a lot of the population isn't as rich, frankly, as it is in other places, they need to finance that specifically based on the electrons that are hitting the roofs and not based on the credit profile of being able to make a $10,000 loan to a low-income person in Brazil. And so they've done real hard work to make sure that they're doing that solar financing, not just based on somebody's credit score, but really based on underwriting the electrons hitting the roof. And that's a pretty exciting innovation that we think enables a pretty differentiated outcome.
Yeah, that is a big distinction there for sure. What tailwinds are helping climate technologies?
Well, the biggest thing that we see is, as you already alluded to, there's massive consumer demand, there's massive consumer power. So I don't want to understate that. And then on top of that, that consumer power, that consumer demand is driving real policy change, not just in the US, but globally. And I think one of the other really exciting trends that we see is, just a change in attitude in Washington, D.C. as part of the Inflation Reduction Act. It used to be that policy discussions were all about taxing carbon. And in the Inflation Reduction Act, they said, you know what, we've got to invest. This is not about just incentives. It's about putting federal money where the policy drive is and really making tax credits, investment incentives, and those things. And I think that's going to unlock the business community in a way that maybe the economists don't think is perfect, but I think the activity that we're going to see over the next year or plus is going to drive up into new speed because of that tailwind.
It's great for the economy too. I mean, these are good paying jobs, and it only helps to upskill the workforce. So I think that's a good thing. You mentioned Brazil. What regions and investments are you actively looking at?
So for QED, we're a global company. We've done a lot in Latin America. We've done a lot in the UK. We're now doing even more in Europe. We've done in Asia, and we've just made our first couple of investments in Africa. So we're a global company. And to that broader theme, what we get really excited about when we think about global investment is the rise of an emerging middle class in countries like Brazil, Mexico, Nigeria, India. And it's just natural. These are consumers who want to have the same experiences that you have on your iPhone or I have on mine, the same banking relationships that you have or we have here. And we think that's a big trend. And that's something we say at QED. Home runs are defined by bigger trends, not just by financial services innovation.
Let's switch gears for a moment and talk about crypto, certainly garnering a lot of attention, and the pressure on the crypto community to differentiate between Ponzi schemes and real businesses certainly has increased, and most recently with FTX fallout. Where is the focus now for crypto?
Well, I think you see the dialogue really shift towards technology, back towards what is blockchain, what is crypto. And I think these things are the same technology, but one is tied to just, speculative assets, speculative projects, and frankly, a lot of scams. The other, I think, is a really interesting technology. You've gotten huge numbers of technologists say, gosh, this is so exciting, so clever. Let's find things to do with this. I think with there, you still have a decade of kind of disappointing projects. The number of Fortune 500s that announced a blockchain team or a blockchain research lab and didn't do anything with it is creating a lot of room for second guessing in this current market. One of the places we're excited is about stable coins. And the reason for that is that stablecoins use technology, but are actually pretty simple. They give something to people that they don't have today, which is a way to move money internationally that is really attached to dollars, but doesn't require the US banking system. That's a little bit scary for US regulators, and I've spent a lot of time in those halls, but it's something that's very powerful as a promise to a Nigerian citizen, a Mexican citizen, a Brazilian citizen. And so that's a place where I think there's a lot of opportunity and a lot of excitement. When we look at this, can you do it the right way? That's going to be an important challenge, but there's a real promise there in making global payments easier for that emerging global middle class.
Yeah, well, and it goes back to your point before when we were talking about climate technologies, that you are seeing these emerging middle classes in Latin America, in Africa, and there's just so much potential to be unlocked there, because if you do get the unbanked or the underbanked able to transact businesses and grow their local economies, the growth potential over the next couple of decades can be tremendous.
And it's not just consumers. There's an emerging middle class of businesses as well. Businesses that want to be global, that want to interact in the global ecosystem. And today they've been locked into local or regional ecosystems. And we think it's not just consumers, but also businesses that are going to unlock that potential.
Okay, Amias, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.